Okay, this is a recording of a payroll example. It's a problem that is not one we did in class, and it's also not a homework one. So this is an additional new problem. I chose it because it's a little bit different than what we did in class. It's a little bit different from the homework, but it kind of is similar to parts of the exam one. So I tried to find something that approached it from a way that would be helpful to you when you get towards the exam. But it's not exactly like the exam. So you need to look at the homework one and you need to look at the one we did in class. All right. So for the end of the year 2017, the electrical repair company reports the following summary payroll data. So the total payroll for the year for all of the employees is $570,000. So they had two classes of employee. They had salaried and they have hourly people. And they withheld money from them. So they withheld FICA taxes. They did federal withholding. So this is the FICA withholding. This is the federal withholding. This is what they withheld for state. This is voluntary withholding for United Way. This is voluntary withholding for health premiums. So these are just, they were already calculated and I just gave you the numbers. So it's possible I'll do that on the exam. It's possible I'll make you calculate things on the exam. It's possible I'll do a combination of the two. So don't, let it throw you. Read the information that's given to you. And if I've given you the numbers, just use the numbers. And if you have to calculate it, um, you'll calculate it. I give you, if you have to calculate it, I'll tell you, it's the first 7,000 or it's this percentage on this dollar amount or this dollar amount is subject to that tax. So you really don't have to memorize percentages or things. I give you the percentages and I tell you how much of the payroll is subject to that tax. Okay, so again, like it says the payroll taxes are Social Security, which is 6.2%. Medicare is 1.5%. State unemployment is 2.5. So that's low. Usually the state unemployment is more, and it says due to a stable employment record. And the federal unemployment is 0.8. Gross earnings subject to Social Security taxes of 6.2% or $490,000. So I told you $490,000 of the total earnings are subject to the 6.2%. Gross earnings subject to unemployment taxes are $135,000. So your unemployment taxes are this and this, and I told you those get applied to $135,000. So on the test, I'll give you that information when you need it. So they want you to do a journal entry for the full year's payroll. So this is just like if this was for a month's payroll or a week's payroll, okay? So this one, it's just the whole year, but the entry wouldn't be any different if the payroll were for a week or a month, because the information could be presented in exactly the same way. Then we're going to do the employer's payroll taxes. Same thing holds. And then we're going to do this W-2 part. And that's not any big deal. I mean, it's just for these two employees, we're going to report specific pieces of information that are provided on the W-2. And the W-2 is the form you get at the end of the year for tax purposes. Okay, so let's go and look at this. So I listed here, you're going to debit the salary expense account. So you can combine these and say salary and wage expense, and it would be $570,000. That's fine. You can also break it up and say administrative salary expense and electrician's wage expense. So I elected to just leave the two separate, but you could just say salary and wage expense, $570,000, and that would be fine. Okay, so the next thing is FICA tax payable. And so in the problem, they gave you this number, 38,645. So you can just copy it over. It's a payable because it never belongs to the company. It's payable to the government. They withheld it for the government. And I put an asterisk here because you can actually go and check this number. Because in the information, they said $490,000 was owed Social Security, which was 6.2%. And if you multiply that out, that's $30,380. And everything everybody earns is subject to Medicare, which is the 1.5%. So the whole $570,000 of wages, so all of this is subject to the 1.45%. So that's 8,265. And if you add those two together, that's 38,645. Okay. Then the federal income tax is payable. They told you that number. I have to tell you that number or I have to give you the withholding tables. And I told you I won't give you withholding tables. So I got to tell you that number. So it's a payable. The company is withholding that for the federal government and they have to pay it to the federal government. Next one, state income tax. So usually we give you a rate for this. We'll tell you it's 2%, 3%, 5%. In this case, they gave you the number. So you're just going to use the number that they gave you. They could tell you it's a certain percentage. And if they tell you it's a certain percentage, you take the wages, 570,000, and multiply it by the percentage. This was a voluntary contribution, so we're just taking the amount that people voluntarily had withheld, and we're going to mail a check to the United Fund because people said, take my money and send it to this charity. So they have an obligation to send the money to the charity. Health insurance payable. The company is requiring people to pay part of their health insurance coverage. So the company will take that money and use it to pay the health insurance bill. So they're going to just put it in health insurance payable account. Sometimes they put it in health insurance expense to reduce the cost of the health insurance. Either way is okay. And the last thing you have to do is make this thing balance. And so we take 570,000, subtract all these payable accounts, and the balance, 295,155, is your salary and wages payable because that's going to be the amount of the checks that get written to the individual employees. That's what their net pay is. That's the checks that the employees take to the bank in cash, and then they get to spend that to support themselves. So these are the checks that get handed out to the employees and eventually will be taken to the bank and cashed by the employees. When they write the checks, because they always write the checks a few days before you get your check. So it's always set up as a payable first and then it gets moved in so that they're taken out of cash. Okay, so the employer's payroll taxes. So think about what the employer is responsible for. So we're going to set up an account. There's a payroll tax expense because the employer has to pay some taxes on behalf of their employees. So the employer has a tax expense. So they're going to match the amount of FICA that the employee pays. So the employee pays 6.2% for Social Security and 1.45% for Medicare. Well, your employer also pays 6.2% for Social Security and 1.45% for Medicare. So they're going to have FICA tax payable. So the employer has FICA tax payable equal to the amount the employee had. So it's the exact same calculation. So the employee had $38,645 withheld from their checks, and the employer is going to pay to the government for the employees. In addition to what the employees had to pay, employer's going to pay the same amount. So it's an expense to the employer as well as an expense to the employee. Then the employer has to pay unemployment taxes. So if the employer fires their employees or lays off employees is what it is, the government provides unemployment insurance to to individuals. And the employers pay into that fund. That's how the money gets there for unemployment coverage for people. So the employer is responsible for state unemployment insurance and federal unemployment insurance. So when they gave us the information for the problem, they gave us the rates for that. So for the federal unemployment, you get a credit for how much you paid to state. So the federal unemployment rate is 0.8%. So when you multiply that, it's 0.008. And they told us in the problem we were going to use $135,000 because the rule is it's the first $7,000 an employee earns. So they have to tell you in the problem how many people are still, it's still their first $7,000. So they'll usually tell you it's this much of the payroll is it applies to. So I just multiplied out $135,000 times the 0.008, so it's $1,080. And then the state unemployment tax. So sometimes this is abbreviated FUTA, F-U-T-A, Federal Unemployment Tax Assistance or Act. And sometimes the state unemployment is SUTA, State Unemployment Tax Act. And so the state rate, they said, was 2.5% because they had very few people they were putting through unemployment. So they had a very good rate. So that was the same $135,000, and it's times 0.025 because that's 2.5%. Okay, and so these three together, you just add those up to get your expense. All right, the last thing they asked us to do, so this shows up on the W-2, and it's just the form that the employer is required to submit to the government and the employees at the end of the year for income tax purposes. So this is what you fill out your 1040 from. And they gave us information. They told us their gross wages, and they had to tell us the federal income tax withheld. But we can do the rest of this because we have rates. So for Maria, the gross earnings were $59,000, and that's what goes in your wages, tips, and other compensation. So we had no other information telling us there was more that should go here. The federal income tax withheld, they gave us that number. Now, state income tax withheld, they had state income tax rate of 3%. So we just multiply the wages times 3% to get our state income tax withheld. So it's $1,770. FICA wages, it's the first $117,000 in 2017. So that amount changes every year. It automatically gets larger with inflation. So it goes up a little bit every year. But it's for FICA, it's the first $117,000 for the 6.2, and the 1.45 is everything after. So 7.65 is for the first $117,000. And if she only made $59,000, it's 7.65 for all $59,000. So I just multiplied 59 times 7.65. That's where I got the 4,514. So for Jennifer, it's the same step. She made $26,000. I took the federal income tax off of what they gave me, and that's going to be based on it's how much she made, it's how many people she's supporting with her earnings. So they want to know if she's married, if she's single, if she's head of household. For each paycheck, they're going to want to know how often she gets paid. So is it weekly, every 2 weeks? Is it every half a month? Is it monthly? Is it, every quarter, or is it once a year? They're going to want to know if she's married, she's single, head of household. I think I already said that. And then how many allowances she's claiming. So is she claiming 0 deductions, 1 deduction, 2 deductions, 8 deductions? So the more deductions you claim, the less they'll withhold because you get an exemption for each deduction. And an exemption this year is 4,050. It's either 4,500 or 4,050. And that's an amount you get to subtract from your income, and it's 4,500. It's the minimum amount of income you can have. Maximum amount of income you can have without paying any tax. So if you earn less than $4,500, you don't have to even file a tax return because you made too little income. And a standard deduction for a single person is 6,550, I believe. So if you earn less than those two added together, you're not going to owe any taxes. And I think that's it for this problem.